Markets digest strong U.S. data, hawkish Fed minutes. At the start of the week, President Joe Biden announced that he picked Federal Reserve Chair Jerome Powell to serve a second term. In a knee-jerk reaction to the announcement, Wall Street indexes surged to fresh all-time highs, but failed to preserve gains and finished mostly in lower territory eventually as investors prepared for the imminent end to the Fed's large-scale bond buying program after Powell's reappointment. His renomination now heads to the Senate for confirmation. The dollar rallied across the board on Biden's decision as investors considered the other leading candidate, Leo Brainerd, the more dovish candidate of the two. European stocks finished slightly higher on Wednesday after choppy trading, with investors continuing to monitor the region's surge after the latest COVID surge. France recorded more than 30,000 new daily infections for the first time since August. On the data front, IHS Markit's flash composite PMI in the Eurozone climbed unexpectedly to 55.8 in November from 54.2 in October, outstripping expectations for a drop to 53.2. In the U.S., the economy grew by 2.1% in the third quarter, marking a slight upward revision from the first estimate released in October. The weekly jobless claims report revealed better than expected results, with claims falling to the lowest level in more than 50 years. Wholesale inventory data was also strong, while the goods trade deficit narrowed in October to the best level since December 2020. On the negative side, however, durable goods orders unexpectedly contracted by 0.5% versus a gain of 0.2% expected. Meanwhile, the minutes from the latest Fed meeting showed that the central banker officials were ready to accelerate the timetable for slowing asset purchases and raising the benchmark funds rate if inflation remains high. A hawkish message from the Federal Reserve after a slew of strong economic data pushed Wall Street stocks lower on Wednesday. Still, the indexes managed to finish mostly in positive territory, with the S&P 500 ticking up 0.23%, while the tech-heavy Nasdaq Composite gaining 0.44% and the Dow Jones Industrial Average losing just less than 0.1%. U.S. markets are closed Thursday for Thanksgiving and will close early on Friday in a shortened session. The greenback extended the ascent to fresh multi-month highs in response to hawkish Fed minutes and strong economic data. After a rally, the dollar retreated partially early on Thursday, correcting lower amid overbought conditions. As such, the Euro-USD pair is back above the 1.1200 figure, but downside risks continue to persist despite the USD index retreating in tandem with the Treasury yields on Thanksgiving Day. Elsewhere, gold prices came under severe selling pressure during the first half of the week. The bullion extended losses to early November lows just below the $1,780 area on Wednesday before bouncing marginally. Today, the yellow metal is flirting with the 100 and 200 DMAs, marginally below the $1,800 level that represents the immediate target for bulls. Meanwhile, oil prices encountered resistance represented by the 20 DMA was last seen holding relatively steady above the $81 figure. Still, Brent crude remains vulnerable as the U.S.-led coordinated release of stocks from strategic reserves eased concerns over tightness in global supply. On the data front, the Energy Information Administration reported on Wednesday that crude stockpiles rose by 1.017 million barrels last week. On the positive side, gasoline inventories showed a draw of 603,000 barrels, while distillate stockpiles declined by nearly 2 million barrels in the week. In other markets, the Bitcoin price keeps sliding gradually within a range limited by the 20 and 100 DMAs. On the downside, the largest cryptocurrency by market capitalization derived support from the $55,000 figure while struggling to regain the $58,000 barrier, followed by the $60,000 psychological level seen late last week. It looks like bearish risks continue to persist in the cryptocurrency market at this point. On Thursday, Asian stock markets were broadly lower, with equities in South Korea falling after the country's central bank raised interest rates and upgraded its 2022 inflation forecast. In China, Kaiser said that it wants to extend the maturity of a $400 million bond by 1.5 years to resolve a liquidity crisis. Shares of the embattled developer rallied nearly 17% following the announcement. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.